This conference will now be
All right, good
recorded.
day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the Weekly Prepper, getting you ready for the week of May 11th. Happy to be here with all of you. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form, and trading does, in fact, involve risk. And just doing normal schedules. I'm a little behind on power sessions, but keeping up on the weekly preppers and the trading labs and the trade alerts, which is the most important thing because we're doing very, very well on all of those. Seasonality wise, not expecting much for the rest of May. Just be aware that at some point, folks, at some point, we're going to have, I think, just my opinion, we're going to have a major pullback ahead of the midterm elections. I don't know when exactly, how big, how, no, and I don't think it's going to be a crash only because the economy's not bad enough for it to be a crash. But I'm just feeling like there's going to be a significant pullback sometime, and the seasonality is very much suggesting that expect a weak period coming. The party won't go on like this forever. Once my friends start bragging about the trade they made on Micron, and telling me how smart they are, well, Wall Street says never confuse intelligence with a bull market. And I'm telling you, be careful. I'm not saying short the market. I'm not saying dump everything, but you got to be cautious here, people. I'm telling you now. I don't know exactly when this party's over, but there's going to be a significant pullback before midterm elections. You heard it here first. All right. So, last week's news, nothing yet on Iran deal, still uncertain. I wouldn't say some people say tensions are high. I don't think tensions are high. I just think it's pretty uncertain yet as to when all of this is going to actually get any kind of resolution. And that's okay. We're used to this. We're used to long-term Middle East wars. We've done this before, and the market doesn't care. And so, from a market standpoint, it doesn't care. The rally continues for 6 straight weeks, folks. That's a lot. That is a lot. And usually more than 4 bars in a row in the same direction, you got to start looking for some kind of a retrace. And I am, but just cautiously so. AI still on a roll. Paul Tudor Jones says it will continue for a good, I don't know, 18 months or so, whatever he said. And so you got to trade the market in front of you and just do it cautiously, is all I'm saying. Semis went parabolic. Micron was up 38% this month. That's crazy. That's a crazy uptick. Oil pullback. There was an oil pullback. That was good for the markets too, but it was still within range. Economic reports okay to okay plus, no big deal, nothing major to report there. But the all the markets were up again. SPY up 2.3. The Q's leading the way easily, 5.5%. Oil dropping. Gold. I'm starting to watch that gold trade. Bitcoin. It's really put in a bottom, I think, folks. Bitcoin's really put in a bottom. Tech strong, energy and utilities weak, everything else flat, basically what's going on. And so here is what's going on for the last day, the last week, the last month. Tech, 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 and more tech. Yep, that's what's happened. And so you can see it in the weekly heat map that all the big boys are driving this market, and they can because they have a lot of heft in terms of the indexes. But the rest of the market, meh to bad, meh to bad. And so look ahead. The markets, especially tech, are overextended, folks. But careful about calling a top. And but you probably, if you've had a beautiful run up, can you find a way to take some off the table? I think you ought to. Maybe not everything, but maybe take some off the table. Big earnings are over. Anything that happened, good or bad, for earnings, mostly over. We're just kind of down into the scraps. We're going to have Moss, Circle, JD, Baba. None of these are big names. They're recognizable names, but they're not huge. So the big stuff is over. Watch the heavyweights, and the volatility is continuing to be fairly moderate, folks. Now, here's the thing: as far as the potential market movers for the economic reports coming up, retail sales, and jobless claims. That's kind of business as usual stuff. The CPI, PPI, that can make things very choppy. So one would have to expect a little bit of increase in inflation due to the big increase in oil prices. So don't be shocked if that happens. That could be something that kicks off a little bit of a retracement. I don't know how big, probably not huge, but choppiness. Expect some choppiness when those CPI, PPI numbers come out. Hey, if they're great, if it's surprisingly low, then that could keep this rally going. So, rating the sectors, tech is still strong, real estate and consumer is still strong, and healthcare is weak. Everything else is kind of middling, kind of moderate, not much interesting there. So here are the details about the earnings reports. Just not a lot of big names left in here. You know, you got your new cores, you got your, just nothing jumps off the page of like, wow, that could really move the markets. So nothing really moves the markets. There could be some individual opportunities there for you. All right. So enough of these slides. Let's get into our portfolio, which, by the way, is up 66% year to date, outperforming a hot market, because that's what we try to do here. We don't always do it, but we're doing it now, and you can't deny that. So Adobe. So we're trading a horizontal spread on Adobe. The short is 257.5, and that should, that should have, 15. Okay, good. So we're out another week. All right, so 257.5. Let's check out Adobe. That's the key, is the 257.5 level. Okay, we're not there yet. Okay. So 257, where are we? Yeah, we're not there yet. We're still a few dollars away. So we're good. But this looks like an excellent bottom feeder opportunity. And if you're not already doing the trade we're in, you ought to really think about it, because I really like the way this is going. And I've been waiting for Adobe to find a bottom here, and it looks like it has. And I think it's a tremendous opportunity. And if you're a little late to the party, believe me, you're not that late to the party, because this thing has a long way to go to the upside. And it's one of those stocks that offers Monday, Wednesday, Friday expiries. So you could cash flow the you know what out of this thing. And that's the plan, folks. I'm already in the plan. It's been going well, but it's not too late for you. If you're not in this plan on Adobe yet, it's not too late. I love this trade. I think it's going to be great. And so far, we're doing just fine. All right. Now, what are we up? We're up. Wow. Hey, wait a minute, guys. You missed out. We're up $62 on this trade. No, I'm just, you can't even measure these horizontal spreads by the P&L, because you sell, and then that trade is gone, and then you sell again. So you need a tracking spreadsheet. You can't go by this. But Bank of America now, the financials pulled back, and so Bank of America is not doing so hot. So I gotta have this on a short leash, but I wouldn't be the least bit surprised if this bounced back. But this looks broken to me. Because, well, on the daily it does. On the weekly it's not. And did we get gap fill? No, we don't have gap fill yet. This was a bad candle. Everything was looking great until this one candle. I'm going to kill this, or at least put it on a very, very, very tight leash. And you know what? We're not always right, but we're not going to. Oh, wait a minute. Hang on. So, oh, this is just a bull call spread. Yeah, it's a bull call spread. I got half of mine turned it into a bear call spread for the last week. Get some of that money back. What do you think of that? Let me go back to that chart. What if I sold a short? Can I do that? I may not be able to pull that off in just a week. It probably wouldn't pay much anyway. I'm just gonna trail stop this. And if it decides to go in my way, great. If not, what's that short? The short is only worth $14. I'm gonna kill that. Okay, so I'm gonna kill the short because it's near worthless. And what that's gonna do is gonna give me an opportunity. I'm gonna buy to close that short at market. I don't care if it goes up or down, and I really don't care. I'm gonna close that short. Okay, that's going to happen. And then I'm going to put a trailing stop on the long. If it wants to cooperate, fine. Actually, I don't even need to. It's only worth $68. So this trade is basically over. Okay, but I'm just going to see if I can milk a little something out of it. Chevron. Chevron, our long is in the money, and this is a bear put spread. Okay, a bear put spread on Chevron, CVX. And I do believe we had a good week here. And the long is in the money, but the short is not. 180. We're looking to ideally would love to have this go 180 or lower by the end of the week, and we're at 181. I'm going to trail stop this because we're coming into the Dodson channel, and I think we've got the lion's share of the profit here. And so it's a good trade, great trade. But I think it's over. And I'm just going to I think the smart thing to do is either close it or trail stop it. And I think I'm going to trail stop it because this momentum on oil may continue. So create closing order. And I'm going to close that on a trail stop. And I'm going to give it a little bit of leeway. Yeah, 50 cents sounds about right. I'm going to do that good till cancel. Confirm and send and send. All right, monitor. IBIT. We're just in this for the long haul. This is a covered call and leaps trade. And I'm going to go ahead and just let this continue to play out. So May 13 is when that short expires. We'll let that go. And I don't think that 47 is being threatened right now, so we'll just leave that alone. The Russell. What do we got here? We have one of those credit trades, and that looks like it's going to work out as a credit trade. And I'm just going to leave that alone. I think it expired. Did it expire worthless? Hasn't been settled yet. No, it's out to next week. All right. So what's cool about this trade is that it's the base case on this thing. As long as it stays above 275, we're going to have a winning trade here. IWM 275 is way down here, down by the 50 SMA. So the base case is we just finish collecting our credit. This thing expires worthless. If we do get a big pullback, come back to those levels for whatever reason, I don't care why, then we could have a big win. So we're perfectly positioned on the Russell. We're going to keep doing that and just leave that in place. So that trade needs no change. And we took profit on the long call. We cashed in our big win on the Qs, and we're just holding this lotto ticket that's only worth $4 on the Qs, and I'm just might as well leave it there just in case we get an unexpected crash for whatever reason, war with Russia, whatever, who knows. But that would be what we're doing there. XLF, disappointing. I think I'm going to kill it. I think I'm going to kill this one with a trail stop. Okay, closing order. Because that's all the financials have been really disappointing. Most of the market has actually, except for tech, for being honest. And I'm going to give this a little bit of leeway here. Give that 25 cents of leeway. And that's it. Good till canceled, trail stop on that. And that's good till June. And if it turns around, I'll cancel the trail stop and then just start cash flowing again. So I have a game plan no matter what happens with any of that. New trades. Let's look at Roku. I really like trading. It's one of those stocks I just like trading because I tend to have a pretty good read on this thing. And so what you want to look at all the time, it spent some time here basing. It's been doing a nice little stair step pattern, and I don't think it's going to end anytime soon. And all we want to do is just scalp a little profit. And but we could do it as a bull put or as a bull call in the money or whatever. But this is one of those things where I think I'm kind of like wanting to like buy the 125, sell the 130, something like that. It's a little extended. I'm not sure. It's a tough one. Let me come back to that one. Let me come back to that one. And let me look at Kroger, or if you lived in Michigan, we'd call it Kroger's. This looks nicely bearish. Lots of different ways you can play this, but this is a descending triangle pattern. And I think it can play well as I think we sell down here at 65 and we buy, I think it's a 65. Let's see here. Well, because I don't see any round numbers here, maybe we just do this as a 65 calendar. I'd like to do this as a 65 calendar, put calendar to the downside and just stay flexible. Is 65 low enough? I think so. Yeah, I think so. Is that an earnings report? No, it's a dividend. Okay. Let's do a 65 calendar on this, or we could do a bear put spread. Yeah, bear put spread might be better. Let's look at the bear put spread. That way, it requires a little less management. And so I think if we did KR, just went out a week or two, did a 60-65 bear put, something like that. And don't ask it to do anything. Maybe go out 2 weeks. I think it's liquid enough to go out 2 weeks. If I bought the 65, no, I want to buy the, let me scratch that. I'm going to buy the, I'm going to sell the 65. Man, look at those difference in the spreads. I don't like those spreads. I'm going to do the monthly. The spreads are just too bad. I'm going to sell the 65 and buy the 70. Let's just go out a week. Buy the 70 and control sell the 65s. So 365, 364. So we can make $1.50 if this thing, we're not asking it to do much. If it goes down to 65 or below it, we could make $1.50. Yeah, that's pretty good. So I'm going to do two of these. Kroger, bid strike, confirm and send. All right. And as far as something bullish, you gotta love hog. Gotta love what's going on here. And my sweet spot would be, that's pretty cheap stock. So you can actually do this as a covered call if you want. but I really love this trend coming off the bottom here. But we're going to do options here. Let's do this as a, let's go deep in the money on the long. Let's do a 20 because it's cheap. We'll do a 20 and 26. We'll do a 20 and 26 diagonal, deep in the money diagonal spread. 2026. Let's go trade hog. Let's go do a hog for a little while. G. All right, I'm going to buy out a little ways. I'm going to go out. I don't think July is far. No, there is no July. Let's go August. Let's buy out a little ways on this. Let's buy the 20. We've got very little time value buying this 20 call. Buy the 20 call on a hog. And I'm going to just start selling against it, right? Start selling against it early enough, starting with the 15th. And I want to sell, I'll sell the 26 for 25 cents. That's kind of like a minimum for me. Why do I always forget to hit the control button? Okay, so I'm long August 20. Sell the May 15 26. That's 543. And I'm just gonna, man, I want to do more than one contract, so I will. I'm gonna do more than one contract. Put up more capital, but I think that this is gonna work out. Confirm and send and send. All right. I think that's enough. I'm intrigued a little bit by here. If you're looking for something bearish, it's below its 50 SMA. It's kind of on a low base here. And Alcoa, I'm not sure I'm bearish enough. I think I'm going to wait on that one. I'm going to check the bow tie on that. We'll go from there. Anyway, one bullish, one bearish. And what else do I like? We're already in Adobe. I like that. Tesla also went bull bow tie. You could do a lot worse than doing something on this breakout here. Is it too late? I don't know. I don't think so. I don't think so. There's too many fanboys out there. I might do a 440 calendar spread, like a gorilla calendar spread. Keep it cheap. 440 gorilla calendar maybe. And because I think the fanboys are going to come in here. All right. So if I did a 440 calendar on Tesla, TSLA, and I'm going to sell, I can sell to a lot of things, but I'm going to sell the 440 on Friday. Call. I can get $6 on that. I'll sell the 440 on Friday. And I'm just going to buy out to maybe June or July. I'm just going to go June. I'm just gonna really do a gorilla calendar here. I'm gonna buy June 440 just because it's an expensive stock. We want to keep the trade cheap, right? So I'm gonna buy the June 440 for $2,000. Control, boom, and I'm gonna get back a big chunk of money. I'm gonna get back a few hundred of that within 1 week. So my net is only $1,400. That's amazing. Confirm and send. Okay, so we'll babysit that trade. That is a really cool trade. And that's like a Saminsky special. That's right up my alley to do that, is to go ahead and find something really expensive that has really expensive options. And if you're savvy and if you're on top of things, if you're watching things, you can sell more often than that. You could sell Monday, Wednesday, Friday on this. You don't have to wait till Friday. I'm going to go out to Friday just because, you guys, I'm going to assume you guys aren't going to be staring at the screen all week. But I think it'd be a better trade if you did. But I think it's a really good trade anyway. Sell the 440, buy the 440 out another month, and do a May June 440, and away you go. On behalf of Wealth Foundations Northwest, it has been my pleasure to have been your coach today. Good luck, good trading, everyone. Take care. Bye-bye.